This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil, going to give you a stock market update. We're going to go through the S&P and all the market conditions related to that. That includes sentiment. We're going to go through overbought, oversold. We're going to look at the volatility, which has switched again. And we're also going to look at the trends in multiple time frames along with the momentum. But there is one key that's actually not on the S&P chart. It's a different chart that I think we have to really watch. So, all right, we're going to get into that in a second. So if you have an interest in learning some of these techniques related to MACD and ADX in multiple time frames, I would suggest starting with the book at rabilstockresearch.com/book. And also, if you enjoy this content, please hit that like button and also subscribe. Okay, so starting out with the sentiment, we did get a jump in the sentiment. It went from 35% up to 40% more bulls than bears, and that does put it in the danger camp. Now, it was basically borderline before, but now it's pretty squarely in that higher risk area. So I moved this to the negative side. Now we're moving from overbought. Now, we aren't exactly overbought anymore, right? But we do have a little divergence in place. In fact, we have a bigger divergence in place based on the RSI 20, but even just an RSI 5 got a little divergence. So, even though this has dropped down out of the overbought camp, I'm keeping it in the negative area. Just to run through these before I drop this off, we've got monthly trends, weekly trend and daily trend, all positive. The momentum is positive on the monthly and positive on the daily. But we are still neutral on the weekly, and we've got some pretty, I'm going to explain this again, and I'm going to show you some of the things that I think we need to be on the lookout for as we close out this year. And there's one chart I am going to go into once we get through the S&P that I think will be crucial. Okay, let's just start looking at this volatility, because what happened this week, as I thought might happen, is the way this was pulling back, it's caused the average true range to drop down below its signal line. I'm sorry, below its moving average. And so the moving average is still rising, and it's actually more like flat, but so it's neutral. It isn't negative. It isn't positive. But if this were to continue and this drop off and this roll over, then we're going to be working this down into the neutral camp, or maybe, possibly oversold, but looking more like a RSI buy signal potentially, if we can come down to say 590 and then hook around and turn back to the upside while this keeps dropping down. I think that would be a really good sign. Now, this is actually a pretty big bar here. So if we got another big bar, obviously, then this is going to perk right back up. So we've got to watch this. Don't assume anything right now. I think, we've got to just stay on our toes. But as I've been saying and mentioned last week, this is a trend year. The low week, here's the low week of the year, and that's the opening week. All right. And then we've been trending above a rising 18 week all year. So what does that mean to me? It means that there's a pretty good chance that we're going to finish off near the highs for the year. Now, it's possible we pull back and then we get a Santa Claus rally and we finish near the high, or we could just keep trending upward. I mean, it's possible. We just got to stay on our toes. But one of the things that I'm looking at is what's taking place in the volatility. Now, it's still rising at this point. If we were to continue to climb in a modest way without any craziness, it's possible this will roll over and this will start to look better. But if this stays elevated with this divergence in place as we push higher into the new year, and the ADX continues to diverge the way it's doing, I'm going to show you that in a second, then we've got a problem developing in our hands. And I want to show you exactly what I'm talking about. I'll give you a perfect example. In fact, let me just let you see this really clearly. So these are the 18s, right? This is the 18 week. This is the 18 month. This is the 18 quarter. Look at what happened before the last bear market started. In late 2021, the volatility ticked up. We started moving higher, okay? And we went to another new high. You can see with the volatility going up, this continued to climb higher right into the beginning of the year. And then we started the descent. Okay. Now, I don't have the ADX up here, but the ADX started dying out right about somewhere about in here. All right. And it was diverging in a big way, kind of like what's taking place right now. So it can go on for a few months. It's not necessarily a sell signal, but it's something we need to be on the lookout for. Now, look at this other thing I want to talk about. Look at how the 18 moved away and kept moving away. And there was a separation there, but it lasted a while. Remember, we talk about this longevity of a trend. When a trend can go long enough and stay far enough away and keep separating from the next higher time frame, then we start to get a little bit more concerned where it's a little bit closer here, and then these lines are starting to separate, and then these lines are starting to separate. Well, that's kind of what's happening here. It's still a little early, but if this goes on between now and the end of the year and we get one more uptick here, and this does something like that, then we're going to be in a similar position. Plus, we're going to have the increased volatility. We're going to have the same divergence potentially. All these things are, we want to think 2 or 3 moves in advance. Always think like a chess player when you're looking at the market. We want to just be ready for this potential to take place. All right. So not making any forecast. I'm not forecasting. This is just good analysis. This is all we want to do is analysis. And then we let the smaller time frames tell us when there's something to do. If we know that there's the potential for some kind of a reversal here, and then all of a sudden we see the hourly showing real strong negative price action with huge negative ADX, then we probably ought to take it a lot more seriously because we're prepared. All right. Let me switch this over to the different time frames. I snuck this in. All right. Let me do this before I go into the S&P. So this is the chart that is the key, I think, right now. What I'm watching is we broke out on a Russell 2000 chart. You can see this monster green bar last week. You can see the green DI making a higher high. I mentioned this last week. You got a low ADX condition. We're starting to show strength. However, look at the way this is pulling back. This is not ideal. This is not what we really want to be seeing. And so we've got to watch the midpoint of this big green bar. Midpoint of the big green bar is also the re-entry of the breakout. Okay. And, you're basically going to fill this gap a little too quick. All right. So something I'm watching pretty closely. Now, that doesn't mean that this just is totally over and it's going to fall apart. But what it does mean is that it's likely not going to take over a leadership role on a relative basis to the S&P. And we really want that right now, because if the market's going to keep climbing, it's going to have a really hard time doing that on the backs of a chart like this that has been going up, up, and away. All right. I mean, this has been going up, up, and away. It's already a trend year. Now, let me just show you the yearly bar again. So, I mean, this is a great year. Is it possible we could have another year like that? I mean, yeah, it's possible, but it's not likely that we're going to do that without some type of a consolidation. Because keep in mind, what we want to do is keep an eye on the 4. All right. And we get a little too far from the 4, we expect some check back. All right. And I think, you could start the early part of next year checking back and then maybe be ready for more upside. But we got to be careful about how this plays out. I would say, into the end of the year, and then as we flip over into a new calendar, we're going to want to be watching to see if this ADX continues to do what it's doing. I mean, this is really weak, right? I mean, we've been going up. So look at where. So this has stayed below, but we went to a new high here. All right. And you see how this hasn't even moved. In fact, the ADX is actually lower than when it was when this actually broke to a new high. So we've made this big move to the upside, and yet the ADX keeps dropping. And the reason is that green DI can't take out this prior peak. Look at what is happening. The sellers are not strong. Right? We can see that the sellers are not there, but the buyers are also really not there. So we're moving up, but we're not moving up in the way that would give me the kind of confidence that would suggest that, wow, this thing could really blow it off to the upside. Now, what can happen, and again, we want to look at all the different scenarios that can take place here. Now, what could happen is that we could show divergence like this and then have a big blow off move and then have one more move to the upside and then look like it's confirming, but it's actually a climax. So we just got to be aware of that. The key is that I think as long as we stay above the 18-week and that 18-week is rising, I don't think we have a whole lot to be too concerned about. All right. And again, unless we jump really skyrocket it into the end of the year, into the beginning of new year, then the 18-week isn't going to be as important. We'll probably start looking at the daily. But for now, because we've gotten confirmation of green DI moving up, if this can turn and make a higher low, and we really want to see the Russell do the same thing, then I think we can finish off the year on an up note. What I'd really like to see happen, and the reason why I'm focused on this Russell, is that if this keeps moving up and the likelihood is it spends the first half of next year correcting, I'd really like to have the Russell kind of take up the slack, and there'd be a lot of ways to make money. The reports that I'm generating from my subscribers, there's a lot of individual breakouts in smaller cap stocks, and I'd love to see those follow through. And I think there'll be a lot more if there's follow through in the IWM or the Russell 2000, whichever index you're looking at. Anyway, that's the update for the week. Let me know if you have any questions. Thanks.